themselves around infrastructure, that we're seeing quite a lot of advances in being able to provide the connectivity, and so that the banks can be able to have 7x24. Once you move to mobile as your primary engagement, you can't ever be down. You can't have the message on the website that says Saturday from 2 a.m. to 5 a.m. We're doing maintenance, right?
That was like
Yeah. That's planned down. Yeah, planned down. And so you have to have new strategies which need new kinds of technologies, particularly around data storage that is always on and mirroring all of those kinds of things. So the connections between the data centers are still a challenge here in Nigeria to be able to get the fiber with the speeds that you need and that sort of thing. But that's moving.
Yeah, I think on that moment, I think that maybe on the continent as well, I still think that we're still sort of reliant on infrastructure that is being provided by foreign countries or foreign places, and that's something that investors here need to pay attention to, to fund the infrastructure. So if it's going to take that digital economy seriously, we need to be able to put investment here, invest in things like you just mentioned. And while we were talking about that, people reference USS, which will drive us into financial inclusion. And I know that was into resources and financial inclusion, but a lot of that is into we've had mobile banking, we've had online banking well over 10, 13 years in Nigeria. And we've still had a percentage of adults in Nigeria that are excluded. It's still not where it should be. What are we doing?
Okay, so I think today in the rural areas, a lot of people are still financially excluded. And so while we're creating products to meet financial needs of people and trying to see what can work for them, it's important to also think of those that are unable to get these services. So because if you look at rural areas, for instance, these guys are not educated, financial literacy is on the high side. So there's a need for us to be able to capture that data and also try to see what we can do to get that service available to them. And like what he said about USSD, today there's a form we call Palace in Nigeria, those who do not have smartphones. So we need to be able to think of the kind of services that we can get so that they can use that USSD to be able to access anything. And we see the lack of those in the rural areas, especially during cash conditions. Those guys were really unable to access cash, and cash is still king in Nigeria, whether we like it or not. So we need to be able to think of what we can do to actually get those guys to be able to access these services.
All right, so I think USSD is the foundation of the easiest channel.
Sorry to interrupt, but we've had USSD. We've made some progress with our financial inclusion. But I don't think that we are as fast as we should. And especially like you said, in Lagos, in Ibadan, in Abuja, whatever it is, people probably have access to several financial services. Now, preparedness might be different. But for what areas, we have USSD. Pedestrians, why is cash still key?
Okay, so the reason why cash is still key has a lot of things around to look into. And often it is neglected. The literacy level in Nigeria is still low. If you look at China, for example, I don't think China has as much diverse language as we have in Nigeria. And that is a critical factor to think about the ease of communication. So if you look at those channels, it's just one. Today, Nigeria now multilingual USSD. We don't have multilingual USSD. So that alone itself is a potential exclusion. Right? There's someone also, particularly at the literacy level, you see that it is much more difficult to actually increase to achieve penetration. So what I've seen and what's going on, which is also very less expensive, the enterprises are set to make profit.
Yeah.
So perhaps when the government will push more through grants and through several programs, but I see all actually striving for this. And that's why you see huge growth in agency banking in the last 5 years. Nothing changes. It's not that we have a knowledge. It's not because we have so much new businesses, but we created just a small product. And we see that it was just simply assisting. And they're much more comfortable because we can't do it. So they go to someone who can help them to do it, and they are willing to actually pay the price. And that's what I'm saying.
Tony, if I may add, I think you asked the question, what are we doing wrong? I think from where I sit and experiences, I noticed that for financial inclusion to work, it has to be deliberate. There must be a deliberate effort from the top, when I say the top, the regulator, the government, to design policies that brings the financial excluded into the frame. So when you have that deliberate effort being done, you will see things change. Because traditionally, as you know, most women, they fall in the bracket of the financial excluded. And at home, you will find a woman who finds it difficult even getting a simple as a SIM card. So will rely on a brother, a husband, or someone to get it. This is a market woman you are trying to make payment to, and then they give you a number, and you see that the wallet belongs to the brother or the husband. So there has to be a deliberate effort to change that paradigm so that the women and the unbanked also have access to banking and they don't have to depend on others. So the deliberate action is what we
Questions? Oh yeah, so I think we, just before we end the panel, we will
Any questions for the panel? Or do you want to hear the commentary? We'll continue. Looks like there are questions here. So there's a question? Sir, yeah.
Question. I think that data is wrong. So when we say that the class smartphones in the villages, I think it's not correct. When you take a global report that says that 63 million Nigerians trade crypto, and the data shows that there are only about 30 million smartphones, how do they trade? I'll give you an example. My parents in the village, they have the Palace phone and they have smartphones. They always use their Palace phones in phone calls. When you put on their smartphones when they want to do video and talk to their grandchildren in the US. After that, it is off. So they have smartphones. We don't have data of the smartphones that are second hand and are brought in. So they have smartphones. I think the problem is that, which I said yesterday, the issue is value. We don't have value for the people in the villages. I want them to avoid. Let me give you a class. My mother is 88. She stopped using her account 25 years ago. She just wasn't interested. I do transactions for her. But if you go to her and tell her HMO at her age, she probably will listen to you. But guess what? After 65, you cannot be signing up the HMO. So there are policies that go with strict financial inclusion. So we should deal with the issues and stop killing financial institutions and stop deal with the policy issues and bring value to the people in the villages. What do they need? I think that's what we see.
Thank you. Thank you very much for the way. Okay. I mean, so from your perspective, it's not just the banks and financial institutions trying to push the financial inclusion giant. It's also, what the side. So, I mean, I know we've had the national financial inclusion that we've had as implemented as advice. Speaking to what we had mentioned around agency banking, I think we can do what the Senate has done and they're doing. I think we're seeing definitely improvement in that. But, what we should also be thinking about is that change, institutional change. What you said around not just offering bank accounts or financial services, but what other value can we provide to people that are excluded? How do we make them institutional things that women being able to buy it for themselves, open those accounts, get a wallet and able to transact?
So I think one of the major changes that need to happen in thinking from the banking institutions is everybody begins with this, you have to have an account. And then they think of the services related to that. To increase financial inclusion, you need to stop thinking about whether or not they have an account. You have to make it available to them, typically a wallet that is not tied to a bank account. It's just, all they need to do is have a telephone. And then you can have people, buying from their roadside vendor. You can have the people that have gone to the big city to work, send money home. And you have to break this concept of they have to have a bank account, right? Because in most cases, they don't have enough money for a bank to carry to have a bank account, to have them as a customer, right? And so you have to start off with a whole different way of thinking around that. You just need to provide them the ability to be able to have the financial services that being able to send money, receive money, spend money, and worry later about whether or not you want to try to bring them in the form of economy.
Right, so I think what you're saying, maybe we shouldn't be thinking this, different. We are supposed to try to make sure that we have that account. Trying to make sure that they have wallets. There's a way that they can transact. There's a way they can participate in the digital economy financially. There's a way they can be credited with the transaction.
Exactly, because once they start having money in their wallet and they spend it, then now you create a credit history, right? I mean, it's not, because these are people that you can't call up the local credit agency and say, what is their credit worthiness? So you build it over time through actual usage, right? And when they're going to have money coming in, because you routinely see it, right? And so you could do things like, okay, we'll give you a small overdraft advance because you want to buy this now, and then when your money that we know is going to be coming in comes in, then it refills that, automatically pays that back. So there's lots of opportunities to be able to offer them services that make their life a lot better without, and start to wean them away from, I gotta have cash, right? You have to build trust, you have to make it so easy to use that they stop worrying about, whether or not, things like a savings account for wives is perfect because you can hide the savings account within the wallet, right? Rather than hiding the money in the tin can up on the top shelf, right? And so we've seen a huge increase in the credit worthiness and the ability to pay of people just because they can keep, very small amounts of money and they just keep stashing it away.
Yeah, go on.
Oh, okay.
Yeah. So let's check. We've got questions.
Okay. I might go as well, but I wanted to come back to you, and we just talk about. I think with Ghana as well, there's the popularity of mobile system and how that has sort of taken millions of Ghanaians to use mobile money, use mobile money accounts to use that as the primary source of transaction. I think it would be good for you to sort of share, what has triggered that and what's also responsible for its success, and maybe the next step we can also draw from that.
Okay, thank you. So it comes to one of the points that Ron made about the perception and the mindset that you must have a bank account. So with data, we realize that, like it or not, the telcos, if I should in Ghana, we can say that MTN, for example, is the largest retail bank. Though they are not a bank, but they are the largest because almost everyone has a telco wallet. So if you look at it that way, then the question is, do we design products waiting for people to come and have bank accounts, or we design products that will ride on wallets? Knowing that the data shows that almost everyone has a wallet, banks now moved into designing solutions around the wallet. And yesterday, one of the panelists mentioned from the bank, one of the solutions that they work with a telco, and then a Fintech to design a savings product which rides on the wallet. My bank, we also have a similar solution where we are even adding an overdraft. Because traditionally, you would expect someone with a fat account to be able to apply for loan or overdraft or something like that. But this little overdraft that you put on the wallet, someone will buy something as biscuits in the morning, buy biscuits in the morning, trade, and then by evening, they've recovered that 100 CDs and then they pay back and all those things. So we look at what actually these customers who already have mobile money wallets are doing, and then we tailor products, designs that will fit what they are doing. And that is how mobile money is still getting roots in Ghana, because we have actually gone into their space as well, collaborating with them, because they don't have the banking license. They have the rights to take their courses, so we collaborate with them, and then it becomes a win-win situation.
And I mean, what you just said, try to ask what Dr. Kuma said, it's not just when you have a wallet, you send money and receive money, and that's it. But also just embedding that, adding value to it. The example of a trader that offered an overdraft has able to quickly get access to credit, and at the end of the day, you have the information how much you get into wallets and all those that. So I'd like for us to sort of tie everything together. And I think I'll come back to you with that. We talk about the questions that we raised.
One question here. You can just say this and then.
My name is Hello. Yeah, my name is Dr. Alexis Baylor from Giants Bank. I just want to, have some few words on this financial solution. People are underfunded or underserved, mainly because they are poor, they don't have the resources to buy mobile that they can really use, or they are illiterate. These are the two major things we need to address. And if I'm a bank, I can use my corporate social responsibility to bridge this gap. We will have this adult education that we can really invest in. Or secondly, I can do that customized mainly for my bank. It's like an incentive. If you're familiar with cash conditional transfer, this is it. How it applies is I'll give you money on condition that you make some impact in the society. If I'm a farmer, I'm using my children to go to the farm every time. I'm denying my children from going to school. Now, as a financial institution, to encourage you to allow your children to go to school, and it's okay every month I'll give you $10. So far that you allow your children to go to school, that's conditional transfer. Can we really apply this concept from the developing world to address this on bank and understand? Because really, the bottom line is these people are poor and they're illiterate. Thank you.
Thank you very much for that. That was very exciting. And I don't know if you would like to add, if you'd like to add anything to it.
Okay, I think that is actually more, and I think it will also require government policy to be able to do some of those things to actually come because there's also a limit to what business enterprises can actually do when it comes to influencing the lifestyle or the state of the society. So I think those are actually there are things that are actually food for thought for digital banks.
Yeah, I was thinking through is like if you go say for example you decide to buy a well and you folks in the hospital, everybody else because if you start the premise that like poor, which is a challenge for some of the actually might not even be poor, they were thinking about poor. So the conditions will be that you continue to use services and like that. But if they're poor, one of the reasons why they haven't been able to, we haven't been able to capture them. And they're sustainable, are they sustainable customers for the banks?
And this is one of the same thing that comes to is it for everybody? And the answer is no. So you determine who are those who are eligible, right? And that also requires to also meet data. Alright, so for example, how many of these we have millions can one bank actually able to capture the time? Alright, so and that gives rise to the need to actually further filter because you also want something that is sustainable. You also want to regroup the investments because those are assets that are also will suffer wear and tear. It's not going to last 15 minutes. So you have to do that. So you more or less do that for those who are in particular sectors. I think you mentioned those are the farmers. Agriculture is not the same. Everybody eats every day.
Yes.
Times. So those are some things that make this actually become more I think it's actually
So I think to create that stickiness for customers, it's no longer what you give them, but it's the value. So you can give me a handset, but if I'm moving money from your bank to another bank, you don't have an idea. So it is not the device, but rather the value you create for the customer, and you get that stickiness. So now we're going to agritech. With agritech, what some of us do is that we educate you to understand that using the technology platforms, if you are, for example, using our channels that we provided you, you are buying fertilizer, you are doing all those things, and you are able to mine your data. Tomorrow, when we are extending credit to you, we are able to see your credit worthiness. And as we engage them, we see the value. It's the value chain. It's no longer the debit and credit that is financing the industry. So customer must always see the value to the team. Then they will also they are not as poor as we think they are. That is one of the myths around the inclusive banking that we are all having to address. But the money is out there.
We have common.
So just a comment about profitability. I think that there's really no village you go into where there's someone in that village that they trust. There's someone that they trust who collects money and lends to everybody. So there are trust issues. So why are we not looking at an aggregation model for banking there, in which case you bank that person and create sub-ledgers for those people? They are not the ones, because they don't trust you, but they trust them. So the guy is there on your account, you now sub-ledgers for them, for those people, and gradually you can now bank them. I think that's the model we should be thinking about, because it's about trust. In Nigeria, people have lost money those buildings from community banks, people's bank, and what it is of trust issues. So we need to look at how we deal with those trust issues. And if this person they trust, let's onboard this person and create some ledgers for them. It's a policy issue. I mean, the central bank needs to be involved in things like that. If we're going to solve this financial inclusion problem with those trust issues, we need to start looking at that information.
Come again?
No more questions.
Then after this, there's a raise of hands.
Okay. I was saying, putting all of this together. And I'd like to really hear your party of what is happening around as financial institutions, whether we're trying to achieve financial inclusion, or we're trying to return something to our investors. And
So if you can speak closer to the mic.
okay. Return something to the investors and excite our customers. What would be your I don't think there's a strategy of this. What should what are you focusing on? What do you think financial institutions should be focusing
I think what financial institutions should focus on is maximizing positioning for the outcomes of the foreign policy. If there is business as usual, there is also position for those possibilities that 4.0 has got to offer. The banks, regardless the state where they are, is to create a journey to actually position. I think that's actually a roadmap to position. So that is what stage you are. You actually have to move towards that.
Thank you, Zambia.
For me, it's about the customer. So customer-centric product design, technology-driven decisions. When we say technology-driven decisions, basically your infrastructure decisions are key, as well as the data, how you use data to ensure that you stay afloat. It's no longer about customer experience or anything, is that they're excited to create that stickiness, let them always feel without you, they can't survive. You can flip the dial. Create that stickiness, and then they'll always come back for more.
Thank you. Love you.
I'm talking about collaboration. So the bank cannot do it alone. The banks, we all need to leverage on every other person's strength. So for instance, we need to collaborate with the telcos because they have all this information, right? We also need to collaborate with government for them to be able to bring out policies that will make it easy for us to be able to give this product to the customers. Even looking at those in the rural areas, we talked about the trust issue. We need to be able to be seen as trustworthy partners. We also need to be able to do those CSR, right, so that they know that we're not just interested in just taking their money, but we also want to give them value. We are interested in them, we're interested in their well-being, right? So it's only when we are able to give them what we have, then they will also be able to release what we really want to get from them.
Thank you. Ron.
So I think that the key certainly is around data, it's around customer centricity, and equally about ecosystems. So I think all of these things are really, really important in order for people to be able to seamlessly, again, back to our Bank 4.0, right, where the use of financial services just becomes incidental to your lifestyle. And so to do that, you need to build an ecosystem. You need to have the processes that are very, very customer centric, and you need then to collect all of the data, because without that, you can't be able to design new kinds of services. You don't know which partners to attract. You can't do new kinds of things. So I think all of those three things are really the key factors to create a Bank 4.0.
Thank you very much. Yes, we're up. No final words from me. I'm just going to re-echo what the panelists have said. Positioning for banking, for being data driven and exciting your customers, especially to partnerships and collaborating with the relevant people in the ecosystem. And then you sort of buttress the points that everyone has made, and then sort of generating value and making sure that you're working with the right partners in the system. And I would like to thank you very much, my panelists. I think we had a very insightful conversation. Thank you to the members of the audience that also asked questions and shared their comments. I don't know if we have been able to resurrect financial inclusion today, but I think we've asked some important questions, and I think that we've left ourselves with things to think about, important concepts to think about as we think about financial inclusion, or whatever name we decide to name this problem in a year or two. But thank you very much to everybody.
Thank you, Pat. Thank you very much. May I request the crew to empty the stage and clear the chairs, because we will be starting a couple of keynotes back to back. But thank you so much, panel, and yeah, the fourth session will be fine. I thank you for buying time. So yeah, I would like to close. Over there. Put over there. You can kindly give some space to the crew. Okay.
In digital transformation, for me, the second word has the heaviest bearing. So, transformation, if you look at the definition, is different from change in the fact that it's a thorough change. So when you embark on digital transformation, it needs to be thought in such a way that you address the right problems. Because when we say thorough change, sometimes it means that you need to have some financial bearing or change management that you have to manage. So it's not something to be taken lightly. It's something thought in such a way that it addresses real problems or real challenges where it's going to make, it's going to go and be aligned with your strategies. So digital transformation is what? It's your ability to adapt to change. It's your being able to personalize your services when you're going to deliver experiences. So for example, when I'm going to log into my app, I want to make sure that I see my name there. Not hello customer, I see hello Christine, I feel valued, I feel respected. It's like I've got this stickiness. I'm being understood as being Christine and not just a customer. So personalization is key, and that was discussed before in the panel. It's key to create that stickiness to make sure that people engage with you as a bank, as a supplier, as a provider altogether. And digital transformation is also required for productivity and efficiency. So when people have been used to doing things manually for a certain time, it becomes complicated for them to change. But when they participate with you in stating that, for example, what I'm going to, I don't know, like for example, give a loan, it's taking me 1 week. But if I've got the streamlined processes, if I've got automated tools, if I've got workflows in place, it might take me 1 day. When you talk to the challenges of people, then it becomes easier for them to embrace the change. So it needs to be something that's done with collaboration, inclusive of people who are having these challenges. It shouldn't be imposed. It has to be something that's done together. So all in all, if I have to put 4 boxes of what it means creating more engagement with UX. It means empowering your employees, so digital experience management. It means optimizing your operations. It means transforming your products. And again, I insist on the word transform. It's not change. It's a shift. It's a different way to look at things altogether, to appreciate things. So it's not just a mere change. It's a big change. So you have to be ready to manage that change. So I just wanted to show you here what digital transformation has had on a few of the big names. It's not a need to make money. It's for various reasons. For example, the United Nations. So thanks to connectivity, thanks to the internet, thanks to interconnection with various players, digital transformation has brought 50% of the developing world's population in 2 decades, which was something that was never seen before in the United States. So for the United States, it was financial inclusion. So that was the goal behind the digital transformation. So Nike, they were the best of the best, but at some stage, they were like, okay, I'm just another shoe brand. They don't want that. They wanted that stickiness. They really wanted to change the brand, to change the way people look at Nike. And so they invested in that, in their branding and customer experience. And what happened was that they not only kept succeeding, but in the 2 years following their brand change, they stock from 52 to $88 in 2 years. So Nike, if you've seen the ads, It will never tell you that the shoe is better than the other one, that the material is the best, or the lace is whatever it is. They'll celebrate the athletes. It's completely different to saying that my shoe is great. They celebrate athletes, which is their values. So you really have to think about how you want to address digital transformation before just investing in it. Don't do it because others do it. It has to talk to your values. For Citibank, it was completely different. Thanks, Annie. So here the digital transformation was about getting everything on one digital platform, so a mobile platform. And for Citibank, it translated into saving them more than $600 million in 2 years. Same for Bank of America. So for them, again, they have a lot of banking apps, they have a lot of platforms for doing things, and they put everything together. And what happened, you can see the figures for yourself, in 1 quarter, more than 2 million logins. So there'll be different results based on what you do. But at the end of the day, it's all about talking to your values and trying to get your customers to stick to them. So I'm going to stick only on engaging with customers because otherwise you're going to be mad at me on the timing. So there's something that's important. It's to understand what are the challenges and what's the context in which you're working. So in this region, internet is an issue. Right? So the Citibank did on the week app, etc., it wouldn't really work. So I have to take that into consideration when I go and put my strategy for digital transformation. So if you look at the internet, for example, you see that nearly 300 million Africans live more than 50 kilometers from fiber cable. So that's a challenge, which means that when you are putting your strategy in place, you need to factor in that you need to use other technologies like USSD, like SMS. But if you go to Europe and you tell them to run USSD, they're probably like, yeah, that's obsolete. So you have to take into consideration the factors, the constraints of the market when you're putting your strategy in place. So how do we engage our customers? We have to personalize our products, and that was being said before in the panel. But it's very important when I'm calling someone and I want to order something, when someone's calling by my name, yeah, I'm putting value. But if it's just, yes, so this is your ticket number, it's not the same experience. So you want to feel value. And that value will bring respect. Loyalty. Loyalty is important because when you reward good behavior, it will persist. When people feel that, they are being heard, they are being respected, they are being valued, then they will stay with you. But if you take that for granted, then this is where you start losing them. Because don't worry, your competitor will try to get them, will try to coach them, and will try to give them incentives. If you don't do it, you're actually killing yourself. Complacency kills. Well, I can talk about Nokia, GE, and the others. Some names who are really well established. They were great in the markets, but unfortunately, they remain complacent. On top of that, when everything is doing fine, they weren't checking what the others were doing, and there it is. Complacency kills. Innovation is not a luxury. It's there. So you have to go with the flow. You have to keep your customers. You have to celebrate your customers. So loyalty programs, it's important. Geo-focus and yeah, anyway. I'm going to go directly to this slide. So this slide, it's from Deloitte. So if you just focus on the green and the gray, so the green is anything to do online, and the gray is anything to do in contact, person to person. So there was a survey that was done,
And basically, people were asked about what they prefer to do in person and what they prefer to do mobile app or the digital channels. And this is the result. So transactional banking, something I'm going to pay my bill, I'm going to, I don't know, pay an account information, I change my phone number, my address, etc. They don't care about talking to people. They want to have something that's easy to use. Application, plug in somewhere. However, when they want to apply for a loan, when they want to get an advice, then they want to talk to someone. When I'm going to pay for my bill, I go on my application, I pay for it. I don't need to talk to someone. Now, if it doesn't go through, then I want to talk to someone. I want to be heard. I want to make sure that everyone knows that I'm mad, and I want the payment to go through. And they give me an incentive because it didn't go through. So depending on how the experience is, depending on the context, you need to be able to have several channels to engage with your customers. And it needs to be proper for the context, suitable for the context. So everything that's BAU, fine, leave it to the digital banking. But when there needs to be more complex interactions, when you need to comfort your clients, when you need to give them advice, then it's best to have contact centers or branches. Why this is important? It's because when you go and say that, okay, I'm going to have a mobile application, I'm going to have a super app that's going to do everything, it's great, but you can't just leverage on that. It has to be a balance between the human and the machine. So you have to have the two channels to be able to engage with the customers at their level, where they are at. And how do we do that? How do we shift? How do we do that major change? So first of all, you have to define your goals. The mission was financial inclusion, like it was for making more money, or it was to decentralize everything around branches. So it depends what are your goals. So define your goals. What's important for you as a bank, as an institution? Is it a new value proposition that you want to put on the market? Do you want to address a white space? What do you want to do? What do you want to achieve? You define your goals. Now, to be able to take a decision, you need to get your data right. Let's say you want to address a new market segment. You need proper data, whether it's a market survey, whether it's, let's say you want to put new products on the market. The first thing to do is to get your data right. You need to analyze your data. There's a market research that says that only 28%, that's globally in the world, not in Africa, only 28% of banks actually use their data today, so to make knowledgeable decisions. And on top of that, only 8% out of these 28% will use the recommendations that come out of it to be able to make knowledgeable decisions, which means that it's completely untapped. So you really need to ensure that if you want to ensure that your change will address something great, if you want to make sure that your product is going to work fine, then you need to ensure that you're addressing the right challenge. So you need to get the data right. Without proper data, you can't possibly make the right decision. It's just a guess out in the dark. I can pray that because it works for your neighbor, it will work for you. But they might not have the same clientele as you do. So it has to be proper to you. It has to be proper to your values, like Nike. It has to represent where you want to go. It has to be aligned with where you want to go. So get your data right. Another thing that's important when you want to do digital transformation is make sure that you address one transformation at a time. Because if you do everything all together, first of all, you won't be able to monitor what's happening. Something important as well, you have people behind that. And people don't like change. They like the routine, they're comfortable in what's happening every day. And when you change everything, it becomes important. Yes, you're going to streamline their processes, it's going to address their day-to-day challenges. And on the other side, you have new tools for your clients. So they're going to be submerged with all sorts of contact centers, I don't know how to use this, etc. So if you take the 4 pillars all together, it's impossible for you to manage it. Keep it simple. Keep it with strong KPIs for you to be able to track and see that you're getting where you want to go. So you need to prioritize as well based on your budget, because obviously things that you're trying to address is much bigger than what you have, then it's simply not going to work. Dynamics right, you have to get the data right, and you have to prioritize it in such a way that it's not being imposed on your staff. It needs to be raised by your staff and communicated. So to do that, you need to, as it was said before, you need to choose the right partner. So data comes with all sorts of forms. If you have some kind of BI, then it helps you, because you have something that's yours, which is your clients, it's your data. But sometimes it's just a matter of getting the right tool to be able to get the right information out of this data. Now you can go and develop everything, or you can choose the right partner who will help you to manage that data, who will help you to get the good information out of it. Another thing that's important is, for example, if you're going to do a super app, then obviously you need to integrate with various partners. Now, what are you going to do? You're going to spend money and time to integrate with all of them, or are you going to have a platform that has a lot of APIs to integrate with various partners? You need to have a platform that's open enough, that's malleable enough for you to be able to integrate with various platforms. You need that. Lastly, you need to be able to scale easily. At the end of the day, when you're going through that transformation, you want more traffic, you want more clients, so you need to scale. So you need to have a platform that allows you to scale easily, cloud, private, public, whatever it is. But that infrastructure needs to be able to change easily without you needing to go through a whole global process. So yeah, that was my last slide. I think that it follows through the panel that was addressed before. Like I said, if you just do not up, innovation is no luxury. You need to do it if you don't want to end up like big brands I named before. So change is inevitable. Now, how do you do it? Get the right tools, get the right partners, get the right framework.
Can you take a question? What's wrong, guys? Where's the energy? Can we take a question? Any golden words to wrap up?
Complacency kills.
Words.
What?
Golden words. So a lot of words.
Golden words.
Words.
Yeah.
Okay, golden sentence.
There we go. The title was Banks Must Deliver on Digital Experiences. So the must part here is important to sink it into your brain, because when you're not doing it, like I said before, your competitors are doing it. So you can't just stay there and expect it to happen naturally. You need to be prepared for that. So have the right tools. Even if you don't want to change now, have the right tools. Start getting the information for you to be able to plan accordingly as time goes by. Because if you don't do it, the others will do it.
We have a question. And it's from our Chief Question Officer.
Chief question.
The Chief Question Officer, Michael Zuma, sir. Chief Overall.
So once again, my name is Michael. I'm very humble. Okay, it's all about digital transformation, right? Change is the only constant thing in life. What I want to ask is, how what do you think government should do, organizations, banks, and whatever people when you form yourself to drive digital transformation in our society? What do you think we should do specifically? Something different out of the box to drive this digital transformation, penetration and adoption.
So, for me, it starts by addressing the right problem. Okay? But to do that, I'll come back to data. You need to get the right data. Doing a change just for doing a change is not going necessarily to attract adoption. I'll give you simple examples. For example, NFC after 20 years back, everyone was talking about that, but nobody really wanted to do it. Nobody wanted it for me, etc., etc. So just because it works some way doesn't mean that it will work for you. Get your data right. See what your customers are looking for. What are the challenges that they have? This is what will drive adoption, because you're actually addressing the challenge that they have. If you just do something because everyone else is doing it, you have, it's luck. You don't know whether it's going to work or not. So it comes back to getting your data right.
One question, please.
Hi, good morning. My name is Mario. I work with Signature now. So, we had a discussion yesterday talking about fintechs and banks. So, we're talking about the issue to make sure what our competitors do and see what they're doing differently. And even if you can't like begin what they're doing, just gather information on their approach. So, I'm saying that fintechs are like the major competitors for banks. And they are both in Nigeria, regulated by CBN. But the license framework is different. For banks, they are more regulated than fintechs. So, for example, let's say somebody was mentioning yesterday that if a fintech comes up with one very digital solution, presents it to the CBS, they will say, wow, this is very innovative, we can go ahead and test it. However, for banks, it's very challenging for banks, the commercial banks, they are not fintechs. It's very challenging because there are so many, let's say, big rules or restrictions they have to follow. They don't understand how to go about it. However, they still have to make this kind of Zilla is almost like the ones that the fintechs have advantage now. But it's almost like the banks are almost not needed anymore. They're going out of place. That the banks are going out of place more. They are not just taking the right steps to get that advantage. I don't even understand the question.
So two different players with two different contexts, and how do they, sort of make the most of that? So for that, I think that banks have the complexity of regulation, etc., like that we're talking about. But at the same time, banks are not fintechs. Banks don't have as vocation to go and develop applications. They have as vocation to make company grow. This is what they're there for, right? But at the same time, they want to reach their clients where they are. And this is where fintechs come in. So fintechs today give banks the opportunity to increase their reach, to be able to go and get clients where they are without having the burden of the development. By simply partnering with the right fintechs to address the right challenges. So this is what I think that is complementary. Now, how the integration happens, this is where banks need to have an open platform where it doesn't take, like 6 months to do development between the fintech and the bank. So it's important for the banks to have open API, the process, framework, how you call it, to be able to expose their data easily to fintechs. Fintechs can just plug in, If I want to do a painting, I'm not going to start developing the paint and inventing how to do a brush. It's the same thing with the bank. So when you want to give new services and you don't have the resources and it's not the patient anyway, then you partner with a fintech that does that for you. So there's room for both because there is a need for it.
Thank you. Christine, we actually have two more questions, but I would like to request my brother Abdul from JS Bank and
one of the topics that gets discussed around Bank 4.0, and particularly lately, when we've seen the growth in large language models, I don't know how many of you have experimented with ChatGPT or one of those derivatives. Most of you, that's great. Yeah, because I think until you've actually played with that, I shouldn't say play, but you really don't get a feeling for the power of what it can do. And so one of the questions that we get is, okay, what's going to happen for banking to AI? So first of all, I think that if we kind of stand back and look at the trends that are going on in digitalization, you have the mobile payments, the super app, the things that we've been talking about for the last couple of days. All of these are going to be impacted by the capabilities that are coming from AI. So if we look at kind of the timeline, we have a situation where, historically with data, during our panel discussion, we started to touch on data. And this is a really, I think, key area that banks are not really focused as much on as they ought to be. Example is one of the challenges for a bank is churn, right? Your customers that they were with you and then they seem to have left. Could you have figured that out before, right? If you knew that a customer had come into the branch 4 times during the week, they had called your call center 3 times, and their number of transactions that they were doing has over time decreased versus what it was historically. If you knew that kind of information, if you could build a model of early indicators of customers that were going to be leaving, you could do things to try to change that. But it means getting a lot more data. An awful lot of places, your data about your call center, your data about your branch visits is not tied together in any other way, right? You don't have an ability to have a 360-degree view of your customer. But once you start to capture all of that information and put it together, now you can start having data-driven decisions. Now you can start to make these decisions. If all is focusing around a data warehouse, which is your transaction information, all the stuff that people call structured information, right? You won't be able to get the full value. You won't be able to take in things like impressions out of Facebook or WhatsApp, so that you can actually build a picture of what people are thinking about your brand, right? So in this, as we move into the data-driven decision making, we also can start to do a much better job of risk management, being able to do risk mitigation, be able to have more accurately understand an individual's use of banking services, And so when something goes outside of that, you can flag it. And so build this and you together. One thing is it's a lot of data, right? I mean, one of the studies is in 2026 you're going to have 220 zettabytes of information. I mean, that's a global number. You don't have to store that in your data center. But the opportunity is to really be able to increase the revenue because you can have new services that are much more carefully targeted. And you can also decrease the cost of the data management. And that's really the key about where AI comes in. Where before, on a lot of these different capabilities, I needed to have a bunch of data scientists to pour through this information and create models. Now, the AI, the large language models can actually do that for me. So previously, all of this analytical AI, the decision-making AI needed a lot of specialized capabilities, right? But what we're doing now in the generative AI area is that the models themselves can create the answers. And that's going to have a huge impact in some of these key areas. One is around fraud detection. So a couple of our customers in China have spent years and thousands of man hours of data scientists creating very key machine learning rules and running it through very large simulations to be able to, and they've had very good luck, right? That one of our customers has seen a decrease in fraud by over $100 million in a year as a result of these. But now, using the large language models, I can actually self-automate the rules, right? I can describe in plain language what it is that I'm worried about in risk, and it can create the rules. Things like anti-money laundering, which is a key area in a lot of countries, including here. How do you tie together all of these different pieces of information and actually see the connections between, various limited liability corporations and Cayman Island-based shell companies and all of this to be able to understand, what's actually going on. And that is something that a large language model can do. The risk and compliance, just that right now, for large trade transactions, people are coming in with stacks of paper, and manually, people have to go through this trying to cross-foot it, understand how it's all interrelated. But with a large language model, you can just feed that in. It'll automatically be OCR and understood, because it's the thing about the large language model is it can understand context, right? You can be able to put all these together and see whether or not the numbers work out. Customer service, we're seeing a huge increase in the use of natural language. So you call up and you just talk and you say, what is it? You describe what it is you want to do, and then you get back an answer, right? Without any interaction with a live human being, right? You can always bail out to a live one, but these models are becoming increasingly more capable in both the recognition of language and then the generation of answers, documentation, all of the, just feeding all of this stuff in. And there are new opportunities particularly in areas like wealth management, where you can describe a particular customer's risk appetite and be able to then create for them a customized portfolio without having to rely on a whole lot of very experienced analysts. So some of the areas that we're seeing, the customer service, the natural language, as I mentioned, the operational assistants being able to, as people are doing their job, that they're getting the input from the large language model on, well, you could look at this, you could look at this. The credit approval automation is a huge area for optimization from this. Interpretation of regulations, image generation. For those of you that may not have played around with some of the image generation capabilities, it's a little scary how accurate they can create something that looks like it was a real picture or even video. So this is going to become an area to watch out because there is obvious information. And then the last area is actually in your IT organizations. You know, I know that here in Nigeria over the last couple of years, there's been a real exodus of some of the highly skilled software engineers. These large language models can now write a lot of that code essentially by themselves, right? You describe the problem you're trying to solve and what frameworks you want to use, what test regimens and that sort of thing, and it will write the code. At Huawei, we're starting to use this in our own internal development, and the ability to generate very high quality software that does what it's supposed to with very minimum effort is really amazing. So every corner of the financial industry is going to be impacted by AI. All of these different things, and some of the key categories are around the how you run your business, new kinds of marketing and sales opportunities, looking for patterns, you know, describing for people what it is that they want to do, risk, the customer relationship, many of the things that I've already mentioned. So just a couple of examples from that we're seeing that have gotten a fair amount of press. Morgan Stanley is using the large language models as additions to their investment advisors to be able to help them more easily create customized operations. One of our customers, ICBC, in the world's largest bank, if you will, is using it for the interaction with customers and also with risk analysis. So an awful lot of analysts that are doing risk around loans, and this is a case where you feed in all of the information, and then it does the analysis, cross-tabbing all against it, and you just describe in real language what it is you want, and then it creates the output for you. Stripe, as a payments company, is using it in two different ways. One, they're using it within their own business to understand things, and then they're also using it in their activities on handling payments. So this is a little more detailed example of being able to. So you have the high level, the requirements analysis, high level analysis, data insights. This is an example using about 100 billion parameters, which is some work that Huawei has been doing with a couple of our bank customers. And then using the same technology that is used in generating software code, where there's a service that's called Copilot, to be able to do the analysis. So you put in the terms that you're interested in. It generates the queries from the data warehouse, from the data lake, because it's both structured and unstructured information. Then generates charts and crosstabs, does an automated report generation, provides the insights, and then it can be accessed within the organization. So this is a live example that is being used today. So this is a small part of it. I think the video is not going to work. But this is just, it was showing that generating the SQL queries, running it against the data lake, and then automatically creating the charts, generating them, and then creating the reports from that. So this was a live example from one of our that we're working with one of our customers. Okay. Oh, sorry.
Just look back and look at some tech issue going on.
So go back one.
Slide 12. We need to coach people.
I'm sorry.
We need to coach people.
Okay.
Yeah. Is that the slide?
Okay, so yeah, let's just jump to this one. So this, for those of you that listened to my presentation yesterday, this just shows that our approach to everything across all of the different kinds of infrastructure in some of our customers here. And one thing that I did want to cover in more specificity is there was a discussion earlier today around cybersecurity. This is starting to be a huge area, particularly around the ransomware. Is many banks around the world are being infected with ransomware, and one of the engineers and the hackers that create these exploits understand about backups, and they're able now to be able to, while they're busy locking up all of your data and encrypting it, they also can reach through to your backups and be able to encrypt them. So one of the areas that we've done a lot of work over the last year and a half is around a solution around anti-ransomware, where there's a bunch of different layers of it, and if you come to the booth, we'll be happy to talk about it. But one of the keys is that it physically disconnects your backup from your network when it's not doing the backup, so that you can't become infected. So with that, let me go ahead and close. And if there are some questions, I'll be happy to take them.
We've got time to take a few questions. It's an interesting presentation. Okay, yes, just a second, sir. Dr. Sitor from Bangalore, sir.
Thank you very much. Very interesting presentation. I just want to get your thoughts on how you think in the next few years to come, AI is going to revolutionize the financial services industry. And what will be the impact on employees?
So I think one of the most interesting things that's happening is the ability to use, with outside the exception of a few banks globally that can build their own large language models. Nobody has the resources to be able to do that. So the most exciting thing that's happened lately is the ability to take the large language model that's already been created from generalized data, and then take specific data from a specific bank and be able to inform that larger language model. And so that you actually get particularly in the areas of things and the customer 360 kinds of activities, that you get models that actually fit exactly your set of operations without you having to create the models yourself, right? It's essentially take the existing large language model, the OpenAI or whatever, and then update it with data. So data still is yours. It's in your data center. You didn't have to, worry about the regulator having, finding out that you're sending data across borders or things like that. So this is one of the exciting areas. We're spending a lot of time in our AI research on this and starting to see some results.
You got any more questions? Ronald? Our Chief Question Officer. Ronald, any golden words, golden sentences to close the keynote?
No, so I think that AI has huge opportunities. You should pick one or two areas that you want utilize to build your own knowledge around that. And it may be in, you might start something simple about marketing programs where it generates your marketing materials and actually can generate marketing programs for you just by you describing what kind of impact you want to have, right? What kind of customers you want to reach and that sort of thing. So learn more about it by doing. Learn by doing. This with large language models, that's the key.
Right. Thank you, Ronald. Thank you so much for your time. Gentlemen, we have Ronald is with us throughout the day, and you can meet him at the Huawei stand, which is right behind this window over here. The booth is at over there. You can actually engage with Ronald at the booth as well. We will be breaking for coffee right now, but there's a little bit of a change, right? An enhancement to the post-break agenda. We have, of course, the two back-to-back keynotes. One is presented by FCMB, and the second is from Nexus Risk Solutions. Followed by that, we'll have the Fintech panel. And originally, as per schedule, initially, we were supposed to have the blockchain panel after lunch. So we preponed the panel to be, instead at 2 p.m., it will be at 1 p.m., it will be a fireside chat at 1 p.m. on blockchain, which will be the closing panel as a fireside chat involving the two speakers and their moderator from Street Cred. And that will be at 1 p.m. So prior to that, we have a 1 hour session on Fintech, information security, and then prior to that, two more back-to-back keynotes. Then later on be at 1:30. But right now we will have a coffee break and we will reconvene in exactly 25 minutes from now. So we request